Hey everyone, this is Serious Coin. I'm your host, Kelly Willis Green, and this is the podcast where we have rich conversations about wealth. Now, this episode is about an asset class that is one of the most seductive and yet, I think, challenging for investors, and that's venture capital. I know a lot of business owners exit or want to diversify outside their core business, and they look to invest in startups. And it makes a lot of sense. You apply your business know-how, you deploy your capital, earn outsized returns, and you help build the next wave of great companies. But with an 80 to 90% failure rate in startups, a lot of investors have learned the hard way that VC investing isn't just business with a different hat. It's a whole new game. So what does it take to succeed? And how many people have actually cracked the code in going from operator to top-tier VC investor? Well, my guest today is someone who has. Enter financial services icon Joe Canavan. Or rather, in my case, re-enter. Joe and I first crossed paths at Fidelity Investments, where we had overlapped briefly at the start of our careers. Well, Joe went on to build and sell two massively successful mutual fund companies, Synergy Investments and GT Global Canada. He also earned a reputation as a turnaround specialist, having stepped in as CEO to restructure various companies, including Asante Wealth Management, and in the nonprofit sector, Children's Aid Society, and most recently, Next Canada. Most relevant to our topic today, for the past 10 years, Joe has crushed it as a venture investor. He's had an insane 80 to 85% success rate. His portfolios included fintech names like Wealthsimple, Coho Financial, Borrowwell, Thalmic Labs, TipTap Pay, to name just a few. So how did he go from operator executive to kingmaker investor? That's what we're going to find out on this episode. So have a listen now as I start by asking Joe to explain his investment discipline.
It really comes down to a few key elements that I try to identify in leaders. And that's where I start. Other people have different methodologies. They go for cap tables, they go for the idea, they go for the industry.
Mhm.
Those are key elements, but they are, down my list. If I can find that founder, that CEO that has had a good track record of success out of university, working for great businesses. I can see where they've learned. And I don't mind if they fail. You're allowed to fail. What did you learn from failure? How did that make you a better leader?
Mm.
How is it that that's going to inform your decisions going forward? And if you can articulate that to me, that's really important. So to start with, I look for the character of that founder. I'm all about leadership. My whole life has been learning and understanding about great leadership and how to identify that leadership, how to know when you have a great leader and what are the characteristics of great leaders. And I find them all over the world and in multiple industries, from entertainment to sports to running big corporations and startups. And so in a startup, I'm looking for the characteristics of a gritty, driven, motivated, basically do everything they can possibly do not to let down their employees, their customers, and their investors.
And how are you assessing that then when let's say it's a first time founder and how do you know that they're gritty and they're going to be good in the corners? Are they people that you know through your network only, or how do you assess that?
Oh, that's a good question. I look for, if I haven't had that person referred to me by somebody I trust and respect and really identify with as somebody that has similar characteristics to me, then I'm looking for the individual. I'm looking for, what did they study in school? How did they do? Did they play sports? I'm looking for people who've been competitive. I love people who have taken on major challenges way beyond what they thought possible and were able to overcome those challenges and that adversity. I want grit. I want determination. I want people that'll go into the corners, people that'll play hurt, and people are going to do whatever it takes to succeed, but not going to break the law. I'm all about values and ethics and doing things the right way. I don't mind if you lose sleep at 2 in the morning. I used to lose sleep all the time. As a guy who's run 6 or 7 different businesses, I have a pen that lights up beside my bed so as not to annoy my wife, because I'd have these crazy things basically streaming through my brain. And if I didn't write them down, I wouldn't get back to
For
sleep.
sure not.
And if I did go back to sleep and I didn't write them down, I wouldn't remember them when I woke up in the morning. So I went and found these crazy pens that would light up so I could write down my notes and they go right back to sleep, right back, meaning 45 minutes later. Now that I have an Aura ring, I know that my sleep score isn't very good when I'm operating a business.
Better to be an investor.
Yeah, it's way better to be an investor. Then somebody else loses his sleep. You're absolutely right. What I've found, and this isn't absolutely hard and fast in terms of rules, but a lot of the founders that I've found are people that have a very strong relationship with their family, their parents, their community. There was this one young guy who I could not believe at the age of 18, 19, he's running a major charitable organization in the Caribbean and going to school full time at university. He just had an unbelievable passion for people and a massive, generous heart. And when it came time, and he asked for some mentorship, I couldn't say no to him because he was such a special human being. And he's now running a unicorn. So again, you see these things at 18, 19 that have manifested themselves in his late 20s to now he's in his mid 30s. He's a wonderful father and a husband. And sure enough, he's running a unicorn.
So your superpower is identifying these great leaders, and I find that interesting because I'm not sure that comes as easily to many operators who then move into investing. And I remember an interview that I read with Reid Hoffman, remember one of the founders of LinkedIn,
Yeah.
who's now a VC investor, right?
Hmm.
And he said he initially struggled with VC investing. And it was his partners who came to him and said, Reid, you are looking at these companies and looking at the concept in terms of what you could do with that company as an operator. That's not the task. It's what can that management team do with that business.
Yeah.
And that sounds like something you didn't have to get over.
Well, that's the second thing that I looked for. So beautiful segue, Kelly. That leadership, usually A's hire A's, B's hire C's or D's. I'm looking for A's. And most of the time, when I look at the people that they have appointed to be on their leadership team, they hire people who are gifted, talented, driven, just like them in other areas of the business. So if you're a great salesperson or you're a great ops person or a great software developer, you're going to hire all the things that you're not good at. Like for me, I always knew where my weaknesses were first and foremost, and I would hire superstars to do all those things that I A didn't like to do and B wasn't very good at. So that's what I'm looking for. A's hiring A's. And what I see a lot of times is A's hiring C's and D's or B's hiring C's and D's. So I really do look to the team. How talented are they? How much autonomy do they have? How excited are they about the mission vision of the company? Then the third is I look at the cap table. Who else is there?
Hmm.
Is it really smart, strategic investors? Is it really talented, successful angels? Is it really newer but accomplished venture capital firms, which it's usually not? VCs don't usually come in the first or second or even third round unless the thing grows like crazy. And so I'm really looking for a smart cap table. There is dumb money that comes in, and you see it all the time, especially in Canada.
What does dumb money look like?
It looks like it's from the government of Canada or the government of one of the provinces. I was just about to say a province name and I would have gotten all kinds of trouble. But it comes from those institutions that are trying to buy the loyalty of these companies for their city, for their province, for their country. And really all government needs to do, and I wish they would just do it, is stay the hell out of the way. Reduce the regulatory burden. Do not put any money, do not put any government money in, because government money is just the capital of the average citizen of that province or that country. They don't need this. You know who wants to put money in? Guys like me, venture capital firms, whatever. You don't need the government's money. So all these silly programs that our ministers keep coming up with are completely useless. In fact, they actually hurt companies because companies get a false sense of, hey, man, I'm doing really well. I raised all this money. Yeah, but if it's from dumb investors, have you really done a good job? And what it does is it prolongs the inevitable. And I find a lot of companies that rely heavily on government support usually die a long, painful death.
Through successes and failures, Joe has seen it all. And the fact that he's been on both sides of the table, building companies and backing them, gives him rare credibility. He's seen what works, what flops, and what separates the great pitches from the forgettable ones. Here's Joe's advice for founders who are pitching investors.
You need to understand the psychology and sociology of investing as much as the math and the portfolio strategy of investing, because you're trying to, as that entrepreneur, tap into that psyche of that person, that angel investor or that venture investor, so you understand what their goals are, what their mission is. And if you can hit on something that really speaks clearly to them, because it's not your story. A lot of these folks come in and they keep talking about their story, their story, their story. They need to talk to, what does the investor want to hear? What
Hmm.
does the venture capitalist want to hear? Because it's your story, but you ultimately, if they're going to write you a check for 25, 250, 2 million, whatever the ask is, and that person or group is going to be willing to step up for, again, remember, they are going to invest in a company, and this is on average for me, 7 to 12 years.
Right.
And there are a lot of bumpy parts to that investment cycle. I mean, I've seen companies go really terribly wrong. And then because you have the right leader and the right team and the right character and integrity, they are able to pull it out. They pivot or they just gut it out and they get to the outcome that you originally envisioned. Others, if you choose poorly, if you don't have that right leadership, I mean, they just let it go because it's other people's money. That's why I always look at character. I had one investor that I continue to invest in now and still working with. That guy went without a paycheck for 18 months. He almost took a job. If I say it, he'll know if he listens to this. He almost took a job full time to run the company at night until he could get it back to where he wanted it. I could not have been more excited or more proud, and I committed to writing another check just so he wouldn't have to do that. Even though I was really grateful that he would. Anyhow, that you need to understand what the investment psychology of who's investing or who you're asking for investment capital from. Like if you talk to a lot of venture capital folks, they'll say they look at 400 companies a year and they'll invest in two. So what is it they're listening for? And usually it's that pitch that really the founder, who's usually the person driving the pitch, or co-founders, if often there's two or three of them, but usually one person is telling the story. It's the ones that really understand what the listener needs and wants to hear and can back it up with credible data or information. Because there's really not much to hang your hat on. A lot of these companies have great ideas, but it's not like you can analyze the financials or data. I mean, they're just great ideas with great people and now potentially great investors.
Exactly. And I think sometimes they all sound good. And as you said, there isn't a lot to back it up.
Yeah.
And how much of it is just luck?
Um, I used to think it was more luck than not, and this is not anything to do with any success that I might have had. It really has been more about learning what to say no to more than learning what to say yes to. And um, I think it's really important because you can say yes to all kinds of people, and then you get stuck in a quagmire. And I knew better. I know my personality type. I know my investment type uh, really well after decades of running investment companies. I don't have the patience for the administration of multiple investments. And so I don't make $25,000 investments or $50,000 investments, really. I mean, have I? Yeah, probably for somebody it was somebody's, kid, and I wanted to be a nice guy, but was that really a big commitment? And was I really committed to it? No. But a company that I'm really committed to, I'm writing a check initially for 100 or 250 or 500. On the rare occasion, one I got up to 2 million, but and to be clear, that one took 17 years to pay off. So it can go terribly wrong for a long time. And they were all good people and well-meaning, and she ultimately killed it. But wow, 17 years. So if your average is 7 to 12, if you get one that's 3, 4, or 5, that's magic. That's just wow. But 5 years is great. 7 is okay. We got this. 9, 12, you start to get nervous. But yeah, 7 to 12 is what I'm using as my guidepost.
But you raise a good point too, because you don't want to invest so much that there's a factor of diversification, right? You want to write modest sized checks. On the other hand, the results, even if it's a 10, 20 bagger, has to be significant enough. I mean, if the check's too small and it's 10 bagger, it's really not going to change your life at all.
Yeah, fair point. So the other thing that's different for me is because I write fewer checks and they are a little bit larger, I generally am also agreeing to act as an advisor to that founder or be on their board or sometimes both. So with USET, which is an insurance tech startup, I work with the founder whenever he needs me. Last week I had a 2 or 3 hour board call. So I'm available whenever he needs. And same with another company that I had a long call with last week. And so whenever they call me, we either have a routine call or, oh my gosh, somebody just offered to buy us and can you please? Or, hey, this is going on. I need to make some changes to my management team or my board. Can you? So I'll step up.
Right.
So I'm putting up my own capital. I'm also working with the founder. So it gives me a beautiful position to see, to help, to guide. And do what I can to add value until they don't need me anymore. And don't need me means they've raised a lot more money and they're a lot more mature and then they've outgrown me. And then I'm very, very happy to move back into the background as an investor.
Switching gears for a moment now, something else I find fascinating about what you do is you spend a lot of time trying to predict the future. You mentioned visioning. And as I understand it, every 2 years, you go off and you look at the world to develop a global thesis. So paint me a picture of what you're doing. Where do you go? Who's there? What's your process? How do you come up with this vision for the world?
So it's a wonderful thing for me to do. Nobody is there. I prepare months in advance with all my reading and listening to podcasts and watching YouTube videos and reading research reports and meeting with companies. And then what I do is I go away, and if it's spring, summer, fall, I generally don't go to any of our family properties because I get caught up in oh my gosh, we got to fix a chimney. So I go to like a hotel. When my children were little and I would do this, I would go to Langdon Hall and I would hold myself up in this beautiful suite with, coffee maker and fireplace and nice views. And then I wouldn't leave. I would go through and just do all my work for 3 days. And I would do vision for 20, whatever 10 years out was. So if I were doing it today, Vision 2035. And then I'd say of all the major technological changes I see coming, which are the ones that are going to become commercial between now and 2035 that are going to have the most powerful impact? Where can I have a leverageable role to play? And so on. So that's a long-winded way of saying I go away for 3 days max. I read, I write, I listen, I meditate, I build a formula, I build a mind map, something I learned from a guy named Tony Buzan years ago. And I have my thesis statement in the middle of the page. I have my 5 branches off of it and how each one of them, robotics and how robotics applies to defense, how robotics applies to daily living in your home, to self-driving cars. And then how does AI, and sometimes the branches intersect. So, how does AI intersect with robotics? Are we going to have, a robot that becomes a little bit more human-like because of its ability to digest and articulate information? And I think the answer is yes. So, I try to see where those branches cross over.
And then do you act on it as an investor?
Yeah, absolutely. Now, again, because my background is more financial services, I tend to lean way more strongly into fintech, insurtech, and companies like that. And, I was lucky enough to meet brilliant young entrepreneurs a decade and a half ago, like Michael Katchen at Wealthsimple, Daniel Eberhard at Coho, Jordan Jacobs at Layer 6, and Tommy Putin and his partner, all brilliant. And now I've got Cap Intel, you said I mentioned, Tip Tap Pay, and so on. And so I lean into those. It's not supersonic flight, but they are going to be game changing technologies, and they're going to be businesses that change how we think about investment or banking or insurance services or whatever. It's an area that I understand. It's an area I know. It's an area I'm networked in, so I can help the founder. I can help the company, and that's the thing for me. If I can't help you, I'm happy maybe to invest, but I don't want to do it. Like, a lot of people, do stuff because they're padding a resume. I don't need padding. I just want to help people. My hope when I look back when I'm 85, 75, 65 is that I've helped people become the best version of themselves as entrepreneurs, as leaders in, the community. And that's my goal. That's what drives me. And it's a powerful and beautiful thing. And if I get that right, I'm telling you, it doesn't even feel like work. It just feels like I'm giving advice to really cool people that become my best friends or really good friends. And I'm really good friends with these folks for years and years and years, and it never stops. So you choose your friends well, you choose your entrepreneurs well, I guess.
I want to ask you too. The other connection we share is we're both on the board of governors of Trails Youth Initiatives, which
Hmm.
I'm gonna give it a shameless plug here, and that is a very entrepreneurial charity. It's founded by an entrepreneur, very mission driven, results driven, very successful, no government funding. And I wonder if it's not by accident that you became involved. Do you have a similar philosophy for investing in the social sector as you do with your companies in terms of picking great leaders and very, very entrepreneurially led organizations? How do you have an investment process for your charities?
100%. Every other year I go away for the same 3 days, and I have a whole book, a whole binder of my philosophy on investing, on startups, on our family foundation, on building our family, on parenting, on being a good husband. And so when I think about philanthropy, I try to see where I can have the most meaningful, measurable impact as well. And because I grew up with very little as a son of immigrant parents, it always struck me even as a teenager, that there's lots that we can all do in our own individual way. So when I was a teenager, I was raising money for various charities through dance-a-thons and sleep-a-thons and crazy little things. But I would get teenagers together and do these things to have an impact. And it really touched me. And then I thought about all the kids in the world that could do better if they were born into a family that loved them, that valued them, that supported them, that taught them. So my thesis statement and Larissa's thesis statement for our family foundation is usually almost always aligned with young children and supporting them, helping them, making sure they're loved and they're educated and they're given the hope and the opportunity for a better life going forward. And so we look for those charities, Trails Youth Initiatives. When I met Jim Hayhurst, its founder, and he and I started talking about his life as a business builder and entrepreneur, and what my vision was, I could not be more aligned with another human being. But yeah, no, I look for great leadership. I look for something that's going to have that impact. I look for something that's going to change the world, and investing in young people and breaking that cycle of abuse and abandonment, of neglect, which Trails did. And the best thing in the world recently was when they were hosting a lunch for the board of governors. They had two of these young people speak, and it brought a tear, not just one tear, many tears to my eyes, because I'm like, OMG, this worked.
Yeah.
And you are proof that it's worked. And now they're paying it forward and doing more and more good in the community. And it's a virtuous cycle of hope, opportunity, and it makes me very excited and very proud.
Well, Joe, it's been wonderful. One big takeaway for me from this conversation is your discipline to absolutely everything that you're doing as a parent, as an investor, as someone who invests in the charitable sector. It's very inspiring, and I hope that listeners take that away as well. But just before we close, I'd like to have our little lightning round of money questions, always a popular segment of the episode. So if you're ready to play along,
Let's do it.
Joe, what is the most unexpectedly annoying thing about being wealthy?
Um, Administration.
Mhm.
It's all the documents you have to be signing. And every time I'm adding more capital, there are gazillions of pieces of paper. Even with DocuSign and whatnot, I still have to go and raise capital from banks. And so it's the administration. I don't really like it. I've got an idea, I got a vision. Let's just say we're good. Like I try to give these companies and some of the funds, I don't do a lot of fund investing. I'd rather just give them money up front. Don't come back to me 6 months later, 18, because then I've got to account for it. So,
Do it again. Yeah.
yeah.
What is your dream splurge that you haven't done yet?
Oh, um, my dream splurge isn't necessarily my dream. I'll tell you what it really is. I want to create enough wealth in the next 10 years so I can spend the following 10 years giving it more fully on a more disciplined, leverageable basis back into the community. I want to spend 10 solid years or longer. Like I do some of it now. I need more capital to have a bigger, more powerful, long range impact. That's what I want to do. It makes my heart so warm and so large to think about having an impact in the world. And that's my splurge.
Beautiful.
Selfish. I know that's selfish, but every time I think about it, it makes me well up.
What's one thing you want your children to know about money?
Just to understand it and respect it. They've all read the books. They hear from me. They've been investing since they were teens. My buddy David Chilton, who wrote The Wealthy Barber, it is one of the most powerful books on the market today for young people. And it was funny. My youngest played AAA baseball, and it was so funny. All these kids were driving to tournaments in the United States or in Ontario, wherever, and they're asking me questions about investments and stuff. And I actually one day I phoned David and I said, dude, I can't get enough copies of your book. Can you point me in the direction? I want to buy a couple cases and I just want to give them out to these kids I have the discussion, then I want to give out your book. And he thought that was such a beautiful thing. He signed cases of books and sent them. He wouldn't let me pay for them. I'd given all those away over time. I give books away on all kinds of things. But that one's really special.
Yeah, I remember reading it early in my career. And yeah, it stayed with me. Uh, Finish the sentence. To me, money is
Opportunity. It's something that you decide. Do you want to use it for selfish gain, or do you want to use it for good? For me, it's for opportunity. It's for a great lifestyle for my family. Like my kids have gone to schools that have helped them become incredible young men. And my wife and I, we take our obligation as parents so seriously. We're constantly thinking about how can we do better? How can we learn? Like we have a very in that binder I was referring to, we have a coaching or parenting methodology from 0 to 18 and a very different parenting methodology from 18 to 28. And then we're going to build a thesis or a plan for 28 plus. Spencer's only 24. So, but we're working on the 28 plus already because we want to prepare for that because who knows how many iterations are going to be because we're rookies at this. We're learning as we go.
And where are you drawing sources from in creating that parenting manual?
Um, Well, there are parents out there who we love spending time with because they have been pioneers and gone before us, and they've done an incredible job with their kids. But it's a lot of reading, and there are a lot of different podcasts on that as well. I'm also in YPO. I'm actually chairman of YPO Gold Toronto, and we have access to incredible resources. I have something to learn from everyone
Yeah.
and I just listen as intently as I can. I try not to have too many opinions, although that's sometimes hard for a guy like me. Just listen, learn, write down those nuggets, and make sure they go into your next mind map on parenting, and you make sure you don't forget them. I have mind maps for everything.
I don't know about you, but for me, this conversation was a total energy boost. Joe had so many sharp observations and takeaways, and I'm really inspired by his discipline. So, huge thanks to Joe Canavan for coming on and sharing his insights. I can't wait to see what companies he builds and backs next. And thank you for listening to Serious Coin. If you like what you heard, please leave us a rating or a review so more listeners can find us. Serious Coin is provided for your general interest only, and nothing we discuss should be taken as investment, tax, legal, or other professional advice. Always talk to a licensed professional before you make any financial, legal, or investment decisions.